Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Benefits. Today I'll be speaking with my guest, Howard Jay Klein, about the casino and gaming business. Howard is author of the House Edge casino investment site on Seeking Alpha. He's worked in casino and gaming for over 30 years. He's been in management and worked with all the big names you'd expect, Caesars, Bally's, and even the Trump Taj Mahal. He's founder and publisher of Gaming Business Magazine, the first ever publication covering the gaming industry. He's written books on casino management, and he currently also works as a consultant to gaming operators and developers. Howard, welcome.
Thank you. Great to be here.
I'm glad we could catch up. It was a pretty fantastic year, fantastic meeting, and extraordinary and unprecedented, perhaps, in terms of what went on with COVID. But I'd love to learn more about your career in casino and casino management. Was it largely here in the Northeast? Did you spend time in Vegas? Where were you?
It was largely here in the Northeast, but I also did considerable work in Vegas, also have done some work in Asia and South America. Prior to my entering the gaming industry, I was a buyer and seller of commodities in a private firm I owned with an associate in the international food business. During that period of time that we were together, the overall financial situation of the world was ruled by the insane level of interest rates. Those who were old enough to recall that in the late 1970s, we were in a catastrophic situation. The primary commodities in which myself and my partner dealt were food commodities. We were doing quite well until, on top of all this craziness, and the lending that we had to do with our banks at these incredible interest rates. And on top of this, we had, I believe in 1974, a major crisis in the price of sugar, which governed the costs of many of the commodities and baked goods, confectionery, and stuff like that we were trading. And it went absolutely hog wild. And this did an extreme level of damage to our margins, our trading abilities. And I said to myself and to my partner, it's time to reinvent ourselves because we're just chasing wildcats here. We're never going to be able to herd all these cats. So I was mulling the possibilities of kind of reinventing myself into some areas where I felt I always had an affinity. And one of those areas was, fortunately or unfortunately, since my post-MBA days, I'd always been something of a journalist in business. I'd written several books in the general business field, some for the general reader, some for professionals, and I always considered myself as a participant as well as an observer. And I had a friend who was a professor of economics at Princeton. He happened to mention to me in 1978 about the sudden legalization of gambling in the state of New Jersey. Now, I had heard something about it, and other than my own recollection of street corner crap games as a kid in Brooklyn, and subsequent to that, great poker games at college, that was an occasional trips to the racetrack. That was about the degree of my involvement. But he says, it's very interesting, the phenomenon that's going. He says, you realize that outside of Nevada, New Jersey has become the only state in the country where gaming has now been legalized. So I thought that was kind of interesting. So he says, do yourself a favor, get on a bus, come down and look around. You might find it interesting. So that's what I did. Of course, the only casino then open at the time was Resorts International. I came up to Resorts International and I saw lines 3 times around the block waiting to get in. The casinos were open 24 hours a day. I went through finally a side entrance through the aegis of slipping somebody $20. And I went inside and I looked at the casino floor and I was absolutely, I can use no other adjective, flabbergasted, seeing around every crap table, every blackjack game, People literally standing behind people in lines, waiting to play slot machines, admonishing, cursing to people. You've been there too long. Get out. Give the next person a chance. And I said to myself, this is absolutely astonishing. What I saw, obviously, was proof beyond measure that the pent-up demand for legal gambling in at least the East, but probably nationwide, was absolutely astonishing. And it was far beyond what every expert who'd been recruited by the state of New Jersey to project the win of Atlantic City casinos going forward. And every single one of them was wrong. The stock made it to the market at $6.50 a share. And before you turned around, it was $375 a share. And that was a very typical kind of analyst insanity that goes on, that to some extent today we're seeing with the sports betting business. But they were just looking at the monthly casino win, which of course was public because it's a highly regulated industry. And it was just escalating, and it was exponentially increasing at such an incredible rate. And when they were publishing earnings, people were astounded. People in Vegas, executives in Vegas, kept sweeping into Atlantic City. They couldn't believe their eyes. The win per day of slot machines and table games was just beyond belief. And little by little, other people started coming into the industry. And I said to myself, riding home on that bus that night, I got my book. What we have here is a business phenomenon, a social phenomenon, a historical phenomenon. This is a very basic human desire that has lasted 2,000 years. There is so many implications, so many storylines. I'm going to write the book.
Does it surprise you, I mean, given that perspective, what you saw there and the demand for gaming, that it's taken till, I mean, pretty much now that to have sports betting become legal again? It feels like, we're just past some prohibition era and we're waiting for all the states to legalize a new form of betting.
Yes, it's more than surprises. It's almost shocking because there wasn't a major casino in Las Vegas that did not have a sports book. And it was already a fairly well-known fact that if you went around the 6 or 8 major sport championship events or tournaments that took place every year, the casinos were absolutely overbooked, absolutely mobbed, not just with your everyday bettors, but with what we call the sharps, which is the almost professional gamblers who would bring $500,000, $1 million, and who would have $200,000, $300,000 a week rolling on NFL games, for example. And we knew, at least later when I entered the business, we knew that the illegal bookmaking business was taking billions and billions of dollars in action every single day. You had the confluence of two things. You had the penchant for sports betting was already there. People were quite comfortable dealing with illegal bookmakers or periodically traveling to Vegas to bet legally. You had the explosive value of sports leagues and the audience for sports. You had this increasingly large contingent of young people, graduates of universities where sports was a major part of their diversion. So that was happening at the same time. And yet everybody was afraid of it. They were afraid of it first because of the fears of fixing. There had been a major fixing scandal in New York City, which was then the apogee of college basketball. So that fear pervaded an awful lot of states, and they just turned the other way and say, it's okay, it's a harmless activity, let the bookies get it. But of course, as everybody knew, the big bookmakers were associated with elements of organized crime. That flow of revenue did find its way into nefarious businesses, but yet the states resisted it, and it took all this time and a lot of public education to reach the point with where we are now.
And an economic recession.
And a big economic recession, and I think a material change in attitudes morally among the nation as to gambling at all.
Let's talk a little bit about sports betting I guess sports betting now is legal in something like 20 states, I think, and there's another maybe 14 on the horizon.
There's 14 to 15 that are actually in action. There's about another 6 that are close and pending. And to project it through to 25, I discussed this with some Morgan Stanley people, friends of mine, and we agreed, I think, that our best projection now is that by 2025, we're probably looking at 38 states, and we could be looking at a range, and this is all over the place, Ed, and like everything else in sports betting, there's a lot of puffery and a lot of reality in the orchestra at the same time. You got the brass section, you got the percussion, and then you got the violins, and everybody's playing a different song. But I think we're looking at probably a 25 to $27 billion business for revenue by 2025 in 38 states that my guess is will be dominated by the top 4 or 5 companies in the business.
That'd be like Flutter, DraftKings, Penn, William Hill.
Those the kind of BetMGM, which of course that's an interesting prospect entirely, since as some of your listeners might already know, Barry Diller's IAC, I guess they're the kings of e-commerce, other than Amazon, etc. Or various kind of websites that Barry Diller has developed over the years with a very strong balance sheet, has bought 12% of MGM Resorts International. They have bought in because MGM has done a deal with formerly GVC, now Entain of the UK, which is one of the largest sports betting operations globally. And they are JV'd in a sports betting enterprise called BetMGM. IAC has already bought $1 billion worth of MGM stock. And just the other day, Diller went on the record saying that IAG will put another $1 billion into MGM to further its rapid building of the BetMGM site. So you have, with BetMGM, with William Hill, which, by the way, has been approved by regulators to be acquired by Caesars, and Flutter, which already controls about 20 sports betting sites, both globally and in the U.S. It leads the pack. DraftKings, which was a Spec, and which I think its IPO is about $9, and it's rolling up and around the 50. So it's been a millennial favorite, I'd say, is the fastest way. And a lot of Robin Hooders in that stock boosted it up. The fact remains is that the sports betting chunk of the gambling industry has demographics on its side. The traditional casino business is fine. It's going to, post-pandemic, it's going to revive to slowly but very surely to levels that it had been before. It's a very prosperous and business that's got a long history. It will remain. But the real excitement is in the area of sports betting, where you're having these exponential increases in handle each month as new states come on. But the general hold percentage, as I say, is still going to be between 6.5% and 7%. Now, to show you the comparison, today, legal casinos in the U.S., which include commercial casinos such as Las Vegas and the regionals I've been talking about, probably will clock about, in a normal year, we're not talking pandemic, about $72 billion in revenue. That will probably reoccur, that will probably remain, and that will continue to grow at a nice, quiet rate. But the perception among sports betting investors now goes well beyond that. What they don't understand is that if we're looking realistically at $25 billion by 2025, you're looking at a as I said, a balkanized group of stocks. And if there is no consolidation, they're going to continue to show small profits.
You talking about consolidation among the sports books themselves or bigger casino operators buying?
Yes, you'll see both. The tendency is clearly Caesars buying William Hill, MGM getting very much involved in Entain. It would not surprise me if, backed by IAC's money, if MGM doesn't go in and just buy Entain. What Caesars will probably do is spin off the international sports betting business and just focus its attention on U.S. sports betting. That's where all the action is. That's where the growth is going to be. And I think the same thing will happen with BetMGM. Flutter has already something like, as I mentioned, 20 sites with led off by FanDuel and many other very popular sites. And of course, what you've seen, these sports betting enterprises, these apps, have made these incredible sponsorship deals with the professional sports leagues, NFL, NHL, MLB, you name it, because they perceive that the imprimatur of official recognition, or official partnership is a better word, with the professional sports leagues is such that it will lend credibility to the betting site and therefore build up a considerable following, particularly among millennials. That's a very, very key thing to them. I'm a little bit skeptical about that. I see these commercials. I'm a sports fan myself, and I see these commercials for this hamburger is the official hamburger of the NFL. Who cares? That's not why people buy it. However, in the sports betting field, I think the imprimatur of legitimacy does have some value to the apps in terms of building a consumer base. So at some point, DraftKings, FanDuel, all of them will have to get some sense of reality so that the customer base they attract are not only attracted by deals, but are attracted simply because they like that site.
Now, let me ask you about the brick and mortar casinos, the more traditional casinos. Obviously, they were hit during the COVID time, and you saw that in their stock prices. Since March, many of them have bounced back, but some still ended 2020 negative. Do you have a sense or an outlook for the traditional casino players in 2021 or in the future? Is that an area to look at if you're looking at investing in the gaming business?
I do. Very good question. Right now, what I'm just looking at now is I've taken the pandemic low of a basket of casino stocks that I follow. Looking at those lows, that was around the middle of March, and they took, as you suggested, immense hits. Then I went further on to see what has been the recovery level of those stocks, and I've noted that the good companies have recovered from, some of them were selling for $9, $10, $12 a share, and now have risen back up to the 20s and 30s. And my projection of my PTs for those stocks are roughly linked to what I believe will be the time duration when they will reach 2019 levels of EBITDA. And that, I think, we are looking at, depending on the sector. The U.S. regional sector is going to bounce back much faster. And I think the stocks in that sector, as I mentioned before, I think Boyd Gaming is one of them I like a lot. Caesars, I think, has got the William Hill acquisition already baked in, but I think that's going to be the single largest casino operator in the United States. It has strength on the Las Vegas Strip. It has strength in regionals, and it now will add the William Hill sports betting to it. I think that is, at the moment, probably fairly priced, but I could see that moving. Among my favorites is Las Vegas Sands. That dropped in March as low as in the 30s. It's now in the high 40s to early 50s. And I think that, to me, as I look at it now And I'm projecting the fact that I think their Asian business, which I think represents about 80% of their somewhat 12 billion in revenue, I think that is going to involve the acquisition of another Asian casino. They have been public saying they want to sell the Las Vegas asset base, the Venetian, the Palazzo, and the Convention Center. They put a price tag of $6 billion on it. I don't see that happening, a possibility, until after the pandemic. But that's a possibility. And they're sitting on a nice $2.5 billion, I believe, in cash. They have a great gross operating margin, and I think they're going to rebound fast. And I'm looking at that saying, if they're in the low 50s now, I'm seeing an $80 to $85 stock like you with, and here's the key thing, with a very modest downside. And I look at the factors that could inhibit recovery for the casino stocks. And the three elements, three subsectors are the Las Vegas Strip, the US regional, and Asia, Macau, the Philippines, South Korea. I look at those three and I say, A, the US regionals should bounce back fastest. One of my favorites, which has already shown that, is a company by the name of Monarch Resorts and Casinos. It is small, it is compact, it's Northern Nevada, and it is growing in Colorado, both states that have excellent forward demographics. People are leaving places to come to that states, and I think that's ridden all the way up until about the 60s, I guess. So that's a good regional I would keep my eye on. It's getting a little bit toppy, but I think that has a ways to go, because I think that their Colorado expansion will be completed by mid-year, and I think that's going to really be a big contributor. So I think the regionals have some nice growth. I think Las Vegas-oriented shares will take longer because they're convention-oriented, and I think it will take time. Even though from what I understand from my people, advanced bookings into 2022 and 3 have been very strong. But that doesn't tell us as to whether that's going to go now. So I think convention-heavy, Las Vegas Strip-heavy companies will recover, but I don't think it'll be as dramatic as the regionals.
Do you think that their efforts into mobile gaming and mobile sports betting will create an affinity that will actually draw people into the physical sites?
I do indeed. As a matter of fact, that's a very good question, Ed. One of the collateral good things, not damage, it's the reverse of collateral damage about sports betting, is that what is happening is that millennials who have basically eschewed traditional forms of casino gambling, they're not enticed by slots. The slot machine manufacturers have been tearing their hair out to come up with slot machines that have video game features, that have collaborative kind of fun gaming features that would appeal, and themes that would appeal to millennials. And they have not yet proven very effective. But sports betting gets the millennials. So for example, if we're looking at the Super Bowl a couple of weeks away, what will happen is the millennials will come to the sports books to lay down their bets on the Super Bowl. While they are there, they will wander onto the casino floor and they will get involved in a blackjack game. They'll say, well, I got a couple of $100 while I'm waiting for the next race, or I'm waiting for the game to end. Let me go play some blackjack. The information I have from my sources is that this has made a considerable contribution to blackjack hold in the casino. So there has been a crossover that is very valuable. Yet when you look at the percentage of sports betting revenue per se that an elaborate casino sports book will take relative to what they take mobile-wise, it's tiny. But they go to the sports book, and if you look at sports book, you'll see right next to it is a magnificent buffet. There might be shops. They'll come and they'll spend money. So that sports betting customer will have time on his hands, will wander onto the casino floor, will take a room, will eat, and that has shown up in the earnings and in the revenue of standard casinos.
Now, what's one long-term trend you see playing out over the next several years?
I see the consolidation of casinos and sports betting apps. I see the consolidation of regional casino groups, which are dominant both in casino gambling and sports betting, getting stronger. But the biggest trend I see is combination and consolidation. And I think that the 3 or 4 big leaders that we know are going to just keep getting bigger and bigger by absorbing the smaller fringe operators.
You know, we do a speed round at the end of our podcast called Trend or Fad. Thought if I can maybe throw out a few different concepts to you and see whether you think it's a trend or fad.
Sure, absolutely. Love to.
In-play betting, trend or fad?
Trend. That is probably one of the highest potential growth areas in sports betting.
How about using cryptocurrencies on slot machines, trend or fad?
I think the jury is out on that.
Yeah, was it IGT just got a patent to allow Bitcoin on their slots or something like that?
And I think, first of all, certainly for the Asian sector, where you have the looming presence of Beijing in virtually everything that affects Asian gaming, not only in Macau, but all over Asia, they are very, very concerned about money laundering. And one of the things about cryptocurrency is the ability to be invisible. So I think there it's a problem. For the US, I think it's less of a problem, but I still think that it's kind of tentative as we do now. So my guess now would be that unless somebody comes up with a way to overcome the potential of money laundering, it's still in the fad sense.
Going public with Specs, trend or fad?
Absolute trend. I think the companies that are looking at the traditional process of doing an IPO versus a SPAC is like day and night. I think what the SPAC offers them is an ability to be judged post-IPO. In other words, they will publish whatever is legally required by the SEC, but they'll try to present a realistic picture. The kind of SPAC in terms of a classic IPO would not be possible. I think the demands that would be made by an underwriter would be much stiffer.
What's the best way for people to find you or read your newsletter or connect with you?
The best way to find me is to go to seekingalpha.com, where my regular public articles are published. Just type in Howard Jay Klein. You'll see my public articles, which I contribute on a regular basis. However, my private articles, the ones which represent far more deep dive research and which touch on my intelligence network with industry people, it's subscribers only, and it's called the House Edge. And you could either type in the House Edge on Seeking Alpha or Howard Jay Klein. Either way will get you to my landing page.
Fantastic. And this has been really informative, and I've really appreciated your time and the discussion. Howard, thank you.
Thank you, Ed, very, very much. I much enjoyed it myself.
And thank you for tuning in to another episode of Trends with Benefits.